Hey everyone, welcome back. This is the place where we break down finance, crypto, and market trends in the simplest way possible. Today, I want to talk about something that could completely change the way we think about money and investments. Yes, I'm talking about XRP and why it could one day become the most valuable asset on the planet. Stick with me because this is going to be a wild, eye-opening ride. Before we dive in, I want to thank each and every one of you for supporting this channel. Every subscribe, every comment really helps me continue making these videos. It may seem small, but it truly makes a big difference. Also, if you're ever looking for a reliable place to buy XRP, I highly recommend Uphold, which I've linked in the description below. Now let's get into the first piece of interesting news. Recently, the new chair of the CFTC, Caroline Pham, made a post on her first day that caught a lot of people's attention. She wrote simply, "Lock in." That may sound random at first, but if you've been following crypto for a while, you know this is a reference to Brad Garlinghouse, the CEO of Ripple. He has always used lock-in as a way to highlight major strategic moves for XRP. What's important here is what this tells us about the new crypto landscape in the US. Caroline Pham's appointment at the CFTC, along with pro-crypto leadership at the SEC and supportive policies from the Treasury, and even the president, paints a very positive picture for cryptocurrency. Essentially, we have an administration in place that could make the US a global leader in crypto innovation. This is crucial because government support and regulation can directly influence which assets thrive in the coming years. Now, why does this matter for XRP specifically? XRP isn't just another digital coin, it's part of a larger financial system, and its ledger is designed to handle global settlements in a neutral, decentralized way. Chris Larson, one of the co-creators of the XRP ledger, recently gave an interview where he highlighted XRP's inherent value, not just as a payment method, but as a fundamental financial asset. He explained that XRP is a cryptocurrency that doesn't carry the weight of any country's economy or the constraints of traditional fiat systems. Unlike the US dollar, euro, or yen, XRP is neutral, decentralized, and non-inflatable. There's no central authority controlling it, and anyone in the world can access it. That's a huge deal because it removes the political and economic muck that comes with sovereign currencies. You get the benefits of a currency without the downsides of government interference or manipulation. Chris Larson also emphasized that XRP isn't just about transactions, it's a store of value. In other words, you can hold it, trust its value, and use it to settle global financial obligations without relying on banks or national currencies. This is revolutionary. For the first time in human history, we have a decentralized asset that can operate independently of governments or corporations, yet still function as a medium of exchange. That makes it inherently valuable and potentially more powerful than traditional currencies. Imagine the implications. Countries are increasingly looking to regain control over their local economies, and many want to trade internationally without being dependent on dominant currencies like the US dollar. XRP acts as a neutral bridge, allowing global trade without trust issues. Businesses can transact across borders efficiently, safely, and quickly without worrying about political interference or banking fees. This neutral and decentralized nature is what could make XRP so uniquely valuable. Unlike fiat currencies that fluctuate based on political decisions, inflation, or interest rates, XRP's value comes from its usability and accessibility. It's simple, transparent, and universally available. That's why it's not just another crypto token, it's a potential backbone for the future financial system. Think about the internet for a moment. When it first came out, no one imagined that companies like Google, Amazon, or Facebook could become more valuable than oil or gold. Yet today, they surpass even the largest traditional industries in market value. I believe cryptocurrencies, and specifically XRP, could follow a similar path. Their utility, neutrality, and decentralization make them candidates to surpass not just companies, but even traditional currencies in value and importance. We talked about why XRP is unique, neutral, and inherently valuable. Now let's dig deeper into how XRP could become the most valuable asset in the world, and why trillions of dollars might flow into it in the coming years. This is where things start to get really interesting. First, let's talk about adoption. XRP isn't just a theoretical idea, it's already being used by financial institutions around the world for cross-border settlements. Unlike Bitcoin, which is primarily seen as a speculative asset, XRP has a clear real-world use case. Banks and payment providers can use it to move money instantly across borders with minimal fees. And as more institutions recognize the efficiency of XRP, the demand naturally grows. One of the key drivers here is that XRP can function as a bridge currency. Imagine two banks in different countries that want to exchange money but don't trust each other's fiat currency. Traditionally, they'd have to go through multiple intermediaries, pay high fees, and wait several days for the transaction to clear. With XRP, that same transfer can happen almost instantly and at a fraction of the cost. This utility is what makes XRP not just another crypto, but a revolutionary tool for global finance. Now, some of you might be wondering, okay, But why would this make XRP the most valuable asset on Earth? Well, it's about scale. The total value of global cross-border payments is in the tens of trillions of dollars annually. If XRP becomes the preferred bridge currency for even a fraction of that volume, the demand for the token could explode. It's simple supply and demand. Limited supply meets growing global demand. Another point to consider is regulatory clarity. Over the past few years, XRP faced challenges, especially with the SEC lawsuit in the US. Many retail and institutional investors were hesitant to engage due to uncertainty. But now, with pro-crypto leadership in key government positions and clear guidelines emerging, that uncertainty is fading. As soon as institutions feel confident that XRP is legally secure, they are likely to jump in big time. And when institutions buy, they buy in huge volumes, which can drive prices up quickly. We also need to think about XRP's technology. The XRP ledger is incredibly fast and energy efficient compared to other blockchains. Transactions settle in seconds, and the network can handle thousands per second. This makes it ideal for large-scale financial operations. Unlike proof-of-work blockchains, XRP doesn't rely on energy-intensive mining, which makes it more scalable and sustainable for global adoption. Scalability and sustainability are key if XRP wants to become a global reserve asset. Now, let's touch on the concept of trust. Traditional finance requires trust in banks, governments, and regulatory systems. XRP changes that because it's decentralized and neutral. No single entity controls it, and its rules are transparent and verifiable on the ledger. This means that any country, corporation, or individual can trust the system without relying on potentially biased intermediaries. That's a massive shift in how global finance could operate. We can also look at trends in financial innovation. Central banks around the world are experimenting with digital currencies, stablecoins, and blockchain settlements. XRP is positioned perfectly to bridge these innovations with existing financial infrastructure. In other words, it's not competing, it's complementing. It can sit between traditional finance and emerging digital finance, acting as a universal translator for value. Finally, it's important to consider psychology and market behavior. Once large players recognize the utility and potential of XRP, fear of missing out, or FOMO, could drive even more demand. Early adopters and strategic institutional investors could accumulate before prices reflect the full potential that creates a self-reinforcing cycle. Adoption drives demand, demand drives price, and higher prices encourage further adoption. So in simple terms, XRP's potential isn't just hype. Its unique combination of real-world utility, regulatory clarity, neutral settlement capabilities, and scalable technology sets it apart from nearly every other asset in the world. If global adoption continues and institutions step in, XRP could move from a niche crypto to the backbone of international finance. We discussed why XRP is inherently valuable and how its adoption, neutrality, and technology position it as a potentially global reserve asset. Now let's dig into some numbers and realistic scenarios to understand just how big XRP's potential could be. First, let's talk about supply. XRP has a total maximum supply of 100 billion coins. Currently, around 50 billion are in circulation, compared to other cryptocurrencies like Bitcoin, which has a cap supply of 21 million. XRP is larger, but it's important to remember that most of these coins are controlled strategically. Ripple, the company behind XRP, manages its holdings in a way that ensures stability and long-term adoption. This means that even though supply is high, it's not freely available for rapid selling, which helps prevent extreme volatility in the short term. Now, let's look at market capitalization. Today, XRP's market cap is roughly in the low hundreds of billions. But if adoption scales up and XRP becomes the bridge for global cross-border payments, its market cap could increase dramatically. For perspective, the total value of global cross-border payments is estimated to be over $150 trillion annually. Even if XRP captures just a small portion of that volume, the implied value of the token could increase multiple times over. And remember, because XRP is extremely liquid and fast, it's well suited to handle massive transaction volumes without congestion. We should also consider the potential role of XRP ETFs. Exchange-rated funds allow institutional and retail investors to gain exposure to XRP without directly holding the tokens. This can introduce trillions of dollars of new money into the market. Think about it. Large asset managers, hedge funds, and retirement funds could start holding XRP as part of their portfolios, increasing demand while supply remains limited. That combination can push prices higher very quickly. Another interesting factor is the disappearance of XRP from exchanges. Over the past year, exchange wallets have shown significant outflows. For example, major exchanges like Coinbase have seen hundreds of millions of XRP leave their platforms. This is usually interpreted as either long-term holders moving assets to cold storage or institutional players accumulating large amounts off exchange. Either way, it signals that available supply on the open market is shrinking, which naturally increases scarcity. Scarcity plus growing demand is a classic recipe for higher prices. Regulatory clarity is also key. Over the past couple of years, legal uncertainty has held back institutional adoption. But with pro-crypto leadership across agencies like the SEC, CFTC, and Treasury, confidence in XRP is rising. When institutions feel secure about regulatory compliance, they're more likely to allocate large portions of their portfolios into XRP. This could mean billions or even trillions of dollars of new capital flowing in over the next few years. Let's not forget about global macro trends. Many countries are exploring alternatives to the US dollar for international trade. XRP, as a neutral, decentralized asset, could serve as a bridge currency between nations that want to transact without depending solely on the dollar. If even a fraction of global trade starts settling in XRP, its market cap could skyrocket. We're talking potentially hundreds of billions to trillions in value. Finally, there's the psychological aspect of being an early adopter. As XRP adoption increases and mainstream awareness grows, fear of missing out or FOMO could push more retail and institutional investors to accumulate. This can create a feedback loop where rising prices encourage more buying, and more buying pushes prices even higher. That's how assets like Bitcoin and Ethereum experience their historic growth. XRP is in a position to repeat or even exceed that pattern due to its unique utility and speed. In short, the combination of strategic supply management, real-world adoption, ETF potential, regulatory clarity, scarcity, global demand, and investor psychology creates a scenario where XRP could grow exponentially. The math isn't just theoretical, it's grounded in tangible trends and market behavior. We explored XRP's potential market cap, scarcity, and how global adoption could dramatically increase its value. Now let's talk about some of the biggest players quietly accumulating XRP and why their moves could have a huge impact on the market. First, let's focus on the role of big banks and financial institutions. Traditionally, banks were skeptical or even dismissive of cryptocurrencies, often labeling them as risky or speculative. But XRP has always been different. Its speed, low transaction fees, and neutral settlement platform make it very appealing for cross-border transfers. Some insiders suggest that banks have been quietly buying XRP off exchanges and moving them into private accounts away from retail visibility. This is a key strategy accumulation without causing major price spikes until they have enough to influence the market meaningfully. Evidence of this can be seen in exchange wallet movements. Over the past year, billions of XRP have disappeared from public exchanges. Coinbase, for example, saw hundreds of millions leave their wallets, while other exchanges reported similar patterns. This suggests that XRP is being pulled into institutional custody or long-term holding accounts, which reduces circulating supply and sets the stage for future price surges. This is classic accumulation strategy. Quietly gather assets while the public remains largely unaware. Next, let's consider private equity and hedge funds. These players typically have enormous capital and access to over-the-counter OTC markets, allowing them to purchase XRP in large quantities without disrupting prices on public exchanges. By acquiring XRP through OTC deals, they can quietly build positions that may one day give them significant influence over market dynamics. This creates a situation where demand could spike suddenly when these institutions choose to move or deploy their holdings. We also can't ignore the role of ETFs. As regulatory clarity improves and products like XRP ETFs become available, institutional investors can enter the market in ways that were previously inaccessible. This could introduce trillions of dollars into XRP markets. And when large funds begin buying via ETFs, it forces liquidity to tighten even further. Essentially, the more money comes in, the less available XRP there is for sale, which naturally drives up prices. Then there's the strategic partnership angle. Ripple has long maintained relationships with global financial players, some of which might prefer using XRP for internal settlements or cross-border operations. This is significant because adoption by major institutions doesn't just increase demand, it validates the asset. When banks or payment networks rely on XRP for transactions, it demonstrates real-world utility, which is a critical factor in driving long-term value. Another important element is the psychological effect on retail investors. When big players are quietly accumulating XRP, it often leads to subtle price stability, despite overall market volatility. Retail investors may interpret sideways movements as stagnation and sell out of frustration. Meanwhile, the smart money continues buying, creating a situation where early adopters are effectively feeding the accumulation of larger institutions. This is why staying informed and patient is key. It's also worth noting that XRP's unique position as a neutral, decentralized asset gives it an advantage over other cryptocurrencies. Unlike coins tied to specific platforms or countries, XRP isn't under the direct control of any government or single organization. This makes it especially appealing for global institutions looking for a secure, stable bridge currency that can operate across borders without counterparty risk. Finally, we have to think about the long-term vision. If XRP becomes a core part of global financial infrastructure, even a small percentage of global transactions flowing through it could create enormous demand. Combine that with shrinking supply on exchanges and accumulating institutions, and you have a scenario where price pressure could lead to exponential growth. This isn't hype. It's the logic of supply, demand, and adoption converging in real time. We're going to look at the realities, risks, and actionable strategies for anyone holding or considering XRP. While the potential upside we discussed in previous parts is enormous, it's important to stay grounded and understand what could go wrong so you can make smarter decisions. First, let's talk about regulation. XRP has had its share of legal challenges, most notably the long-running SEC lawsuit against Ripple. While the case concluded in Ripple's favor recently, this reminds us that regulatory risk is always present in the crypto space. Governments can introduce new rules or taxation policies that impact how cryptocurrencies operate. Even if XRP is already favored by banks and institutions, sudden regulatory changes could create short-term price volatility. Staying informed on legal developments is crucial for anyone holding XRP. Next, we need to consider market risk. Cryptocurrencies are inherently volatile. Even if institutions are quietly accumulating XRP, public sentiment, macroeconomic events, or major market sell-offs can still affect price. History shows us that crypto markets can swing dramatically in both directions within days or even hours. This is why it's vital not to invest more than you're willing to lose and to avoid panic selling during temporary dips. Discipline and patience are key. Liquidity is another important factor. While XRP is widely available on exchanges, the majority of tokens may be moving into private or institutional custody. This can create situations where buying large amounts at low prices becomes difficult. For retail investors, this means timing and strategy matter. Smaller positions held consistently over time could be safer than attempting to catch the bottom or make risky trades based on hype. Technological risks should also be acknowledged. XRP operates on the XRP ledger, which is fast and secure. But any network is susceptible to bugs, cyber attacks, or unforeseen technical issues. Ripple and the broader community are constantly updating and maintaining the network, but no system is completely immune. Diversifying your holdings and understanding the technology you invest in is always a good approach. It's also essential to consider adoption challenges. For XRP to become a global reserve asset or a widely used settlement currency, major institutions and governments need to actively integrate it into their systems. While momentum is building and the vision is compelling, adoption is a gradual process. Expect a mix of progress and setbacks along the way. Understanding this timeline can help manage expectations and prevent frustration. Now, let's shift to strategy. If you believe in XRP's long-term potential, consider a balanced approach. Hold a core position for the long term. Stay informed about institutional activity and track exchange flows and ETF developments. Look for signals of increasing adoption, such as new banks using Ripple's technology or large funds buying via ETFs. This gives you insight into when the market could experience upward pressure. Education and community are also critical. Following reliable sources, joining discussion groups, and participating in educational communities like the Bullion IQ Discord can provide early awareness of market shifts. This isn't about chasing every rumor. It's about staying informed and having multiple perspectives to make well-rounded decisions. Knowledge is your best tool in a fast-moving market. Finally, mindset matters. As we've discussed across these 5 parts, XRP has massive potential, but the journey will not be smooth. There will be volatility, unexpected developments, and skeptics along the way. The key is to stay calm, manage risk, and keep long-term goals in mind. Think of XRP as a new financial infrastructure rather than just a speculative token. Its inherent value, neutral position, and growing adoption could one day redefine global finance. But patience and strategy are essential. To wrap up, remember XRP's potential is enormous, but the path is complex. Balance optimism with caution. Study the trends, watch institutional moves, and stay informed about regulation. Doing this gives you the best chance to navigate the market wisely and capture long-term gains. Thanks for joining me on Bullion IQ, and stay tuned as we continue to break down crypto markets, technology, and strategy in simple, actionable ways.